into Fire Tip Trading Platform, see where the market's closed here this Monday. Corn for March just traded down 7 1/4. Beans traded up 3 1/4. Wheat down 13. Kansas City wheat trading off 6. Brock, one of the things that I was noticing here is that soybeans really has marched higher here in the last month. We got up to around 14.98. We found resistance up there, and we sold off a little bit later on in last week's trade. However, today we were able to hold that 200-day moving average. The 200-day moving average price level is at 14.64. Today we closed off the day at 14.75. To me, I think that's very technically strong, and barring any bearish sentiment tomorrow in the report, I think there's a good chance we could move up and test that $15 level. But, of course, it's all about the USDA report tomorrow. That's what's going to drive price action. Brock, what are the analysts expecting?
You know, for the most part, we don't really see production changes in this month's report. They usually hold off until January when they get some better information from the farmers that they survey. So where we're going to see the revisions is to the demand side and to the ending stocks, you know, as a result of those demand revisions. You know, the average of the analysts are expecting corn to be up about 19 million bushels, beans to be down about 5 million, and wheat to be up about 14 million bushels. You know, for corn, I think the real area that we need to focus on is the export sales. We've been running well behind for most of this marketing year. We're behind by about 26 million bushels on the actual sales. But something that's even more concerning to me is that on the inspections, the amount of grain that's actually leaving the country for corn, we're about 66 million bushels behind. Wow. So I wouldn't be surprised tomorrow if we don't see a revision lower on export sales by about 25 million bushels for corn. You know, soybeans, we're running red hot right now. We're about 183 million bushels ahead of pace on the export sales there, so a revision higher for soybeans is probably in the cards. But you know, corn and soybeans, we're kind of talking about export sales right now. I think another thing for corn that we need to focus on is really the ethanol production and how much corn is actually going to ethanol. You know, Cody, I know you took a little bit of a look at what the numbers are looking like. What did you see?
Yeah, well, you know, export or ethanol, corn used for ethanol, we really expect to see a revision lower here in this report. The bottom line, even though we're 10% lower compared to where we were last year, and the end of the year forecast produced by the USDA is 10%, we still think the USDA has opportunity to lower their overall corn used for ethanol figures. If you take a look at this model right here, what you're going to see is that this is last year's corn used for ethanol on a week-to-week basis, and here is this year. The red histogram here shows you just how much corn is being used. Obviously, it's significantly lower than last year, and the green line is what is needed to meet our forecast for ethanol, or for corn used for ethanol, and our forecast is significantly lower than the USDA's. The bottom line here is that we would anticipate, if you're just going by where we are compared to last year, we would anticipate basically corn used for ethanol to start picking up here in the next coming weeks. The reason we don't think that is going to happen is because the margins are very, very squeezed right now. Last year during this time period, we were looking at about $2.33. This year we're looking at $1. We don't see corn used for ethanol improving here unless we see corn prices moving lower, as ethanol hasn't increased in price at all here lately. So the bottom line here is I think there's definitely room for ethanol to be revised lower, and I think overall tomorrow we have room for a bearish surprise when the USDA releases their supply and demand report for corn.
All right, so export sales look like they're going to be revised lower. Ethanol is going to be revised a little bit lower for corn. You know, soybeans, we're going to probably have a little bit of a revision higher for exports. You know, I think the other part of the equation that we really need to pay attention to is the South American production. It doesn't look like we're going to get a lot of revisions to much of the production down there. Soybeans for Argentina, Brazil corn, Brazil soybeans, they're all going to be left virtually unchanged. I think the area that we need to focus on is Argentinian corn production. It looks like it's going to be reduced by about 2 million metric tons. I think most of that is due to the wetness that has been a continual problem over the last couple months in parts of Argentina.
Yeah, we'll just have to see. Well, if you want to watch these markets live, as soon as the USDA releases their numbers, you can do that by taking a demo of the Fire Tip Trading Platform at grainhedge.com, or just give us a call in the office here at 877-472-4607. We'd be happy to set you up. Thanks a lot, and we'll see you tomorrow for the report.